Good afternoon, everybody, and every person that we know around the world. What we have is the S&P 500, and this is the MMT trading application. It's a market maker app, and it's done on a 3-minute level. And we are going to talk about that left elbow gap down, and we came right back in the S&P, went straight right back up here to that diamond, and there were the diamonds, which are SMF bots, and we are making that lower low right now as we speak. So volatility, as I have said, is here. What? It's here to stay. One of the other things that we're going to show you is the following. One of the things that we're showing in the MMTs in our market maker application, we own it, and it is exactly on today. Each one of these 1/8 values are 1.76, $1.76. And the math never does lie. And on that opening bell, we shot straight down here to the bottom. And then we had buy that dip mentality, and they sure did. They came right back in here. You can see how long that wick is right there. Each one of these lines are $1.76. So basically, he comes 1, 2, 3, 4, and then 5. 5 times 176 equals a price. This is mathematically, it doesn't lie. We came back, we rallied all the way up, and we came back all the way down on a 15-minute. And when these diamonds were going lower, as they were, that supported that side of the trade. When the diamonds and our market maker system, which is pure mathematical, and the diamonds were going this way to the higher side, and when it stopped, it went up one more 1/8 values, $1.76. And when the diamonds are going down and we're within a 2 1/8 delta range, you're always going to have the qualifier closing down here on that diamond, taking these out of the equation right here, and then getting ready and bang bang and bang, and they have did it again. The time is 12:01 p.m. Pacific Standard Time. It's on the S&P 500. It's using the MMT charts and then trading the volatility. And there are a lot of stocks that move the very, very same way in that S&P. And on that opening bell, there was this to take into consideration. What we have here is a 3-minute volatility index. It's a fear indicator. So when the markets were gapping down, this was at its high, and this came all the way down, and now fear is back into the market, and we have broke higher right there. Now, let me just show you one thing you have to know about fear. The market hasn't had a lot of fear in there. The more fear we get, the better pricing we're going to get. So let's just be forthright. And here we are. So I'm going to bring this part of it. When we were breaking out much higher off of these lows, that is exactly when that fear indicator went straight down. And so on the VIX, which is a relatively fear indicator to the S&P 500, and the S&P 500 is behind us with the 15-minute chart, and we have gone straight down since we made that high volatility double top. We reversed and went straight down. And here's what's happened with the fear indicator. I'll pull this up a little bit more. We were in a cycle that the VIX went straight up and it's continued to go up all day on a low grind. And basically in our MMT application, we're right to the money as far as the way that volatility is going to trade. So when we're breaking out here, of course, we're shorting stocks. When this is going straight down, as it was over here, that's when we are buying to go long. And this is the VIX fear indicator, and this is a 15-minute chart on the S&P 500. The time is 12:04 p.m. Pacific Standard Time. The date 7-6, 2015. How about that? So the bear is definitely getting his edge back, and the actual directional movement is to sell at every top. We've been saying this forever, and we have. And we have made it clear that the S&P was going to go down as it is. But here's the thing. It's going to get oversold here shortly, in the next few days. Earnings season is coming out, right? So basically, when you want to go see how right we were, we talked about Dow Jones setting up to go lower. We talked about the S&P for quite a while, and this is what it's doing. It's living up to our expectations. Here you go, S&P. Here you go, S&P. Here you go. Go look for them all. We gave out the live analysis, and you got to take responsibility and watch through here what we do and whatnot. So this is how that S&P on a 15-minute chart, and then the fear indicator, and they're both got almost equal to the bull and the bear, both on that intraday low.